Welcome back to our second training video on the scenario package for Vita. As I stated in the first video, for this training we're using the tax year 2020 because tax year 2021 state section isn't fully functional on the practice lab. So for everything that is marked 2021, we will read them as 2020. And everything that does not apply to 2020, we'll either leave them off or switch them. So for scenario 2, we have an update on Rafael Cruz. Remember on scenario 1, he was a dependent on his parents' tax return. He provided us with a W-2, a 1099 interest form, and a 1099-T form that he did not qualify for because of his filing status. So for the second scenario, we're keeping all those tax forms from scenario 1, but we're updating Rafael's life's event. So now Rafael lives on his own and his monthly rent is $450, which includes heat and gas. He also received unemployment insurance for 2 months in 2020. He received his first and second economic impact payment of $1,800. He received a statement of debt settlement for $2,200 from Buffett Visa card. So based on the Vita scope, we're going to complete John's tax responsibility, and based on the worksheet, determine whether or not he's solvent or insolvent. We have his unemployment form 1099-G, and we completed the insolvency determination worksheet, and based on the numbers, his assets are greater than his liabilities, then he is solvent, which means that the debt cancellation amount needs to be included on his return as income. So let's go ahead and look at publication 4012 to fully understand this concept. In publication 4012, page 128, we can use the screening sheet for non-business credit card debt cancellation to help us better understand. So following the step 1, did the taxpayer receive 1099-C cancellation of debt? Yes. Go to step 2. Was the credit card debt related to a business? No, it wasn't. Go to step 3. Does box 6 of the form 1099-C indicate code A for bankruptcy? No. Go to step 4. Was the taxpayer insolvent immediately before the cancellation of debt? We did the based on the calculation that we did, we know that Rafael was solvent, therefore no for question 4. We're going to step 5. So the cancellation of non-business indebtedness or cancellation of debt must be reported as ordinary income on form 1040. So that $2,200 that was canceled as a debt needs to be reported on Rafael's tax return as income. So let's log into our practice lab. Now that we've determined that Rafael is solvent and that his debt cancellation amount needs to be included on his return as income, let's go ahead and log into the practice lab. Remember to change the tax year to 2020. Instead of starting a new tax return, we're going to click on client search to look for Rafael Cruz. Click select. Because we're only updating his life events, we will use the menu section on the left on the screen to jump through each section. So click on basic information. His personal information are still the same, but we'll go ahead and change his date of birth to make him older. Now that he's older, we also know that he's no longer being claimed on his parents' return. So make sure to uncheck that box. However, he is still over 18 and a full-time student at an eligible educational institution. His mailing address hasn't changed. So scroll down and click continue. And now we know that he received the first and second recovery economic impact payment. So let's go ahead and indicate that on his return. He received $1,200 for the first payment and $600 for the second payment. Click continue. Continue. So we've already added the two income that he gave us, his W-2, the interest form. So none of those two will change. But now we will go ahead and add the unemployment compensation. So next to Form 1099-G, box 1, click Begin. Add or edit and fill out the form. So we need to add the payer's identification number. It will populate because oftentimes TaxSlayer will remember the payer's identification number. Just verify that everything matches with the form that you have and go ahead and fill out the unemployment compensation box 1 and any other information that's on the form, such as federal income tax withheld, state identification number, and state income tax withheld. Then scroll down and click continue. Click continue. Click continue. And scroll down to less common income to add the debt cancellation. Look for cancellation of debt, 1099-C. Click cancellation of debt, Form 1099-C. We know that the creditor's name is Buffett Visa card. He also gave us the EIN number, which is 60008763, and the amount was $2,200. Click continue, click continue, and click continue one more time. So now remember from scenario 1, Raphael provided us with the 1098-T form. So now that he's no longer a dependent on someone else's return, he can now claim the tuition credit. So let's go ahead and add that credit on his form. For the purpose of this training, Raphael is at least a half-time student, and we can only add qualified tuition and related expenses. Let's review publication 4012, page 225, determining qualified education expenses. The second paragraph, you can determine the amount paid by verifying the payment received from the student account statement with the amount shown in box 1 on Form 1098-T. So that includes books, supplies, course-related materials, and equipment if claiming the American Opportunity Credit. For publication 4012 gives us a perfect example of Bill and Sue, who have a Form 1098-T with $7,000 in box 1 and $3,000 Pell Grant in box 5. But during the interview, you determine that $3,000 was paid in September 2021 for the fall semester, and $3,000 was paid by Pell Grant, and $4,000 was paid by loan proceed. They also paid $5,000 for books in 2021. So the math to determining the amount received for qualified tuition expenses will be the $3,000 plus the $3,000 grant plus the $4,000 loan plus the $500 paid for books out of pocket minus the Pell Grant. So that gives you a remaining of $4,500 for qualified business expenses. So what they did is they subtracted bucks 5 from bucks 1 and added the out-of-pocket expenses. So now that we've added the extra income, scroll down, click continue. On adjustment, on deduction, click credit menu, edit. Education credit, Form 1099-T, click begin, and Rafael Cruz, American Opportunity. So we're selecting American Opportunity because he is still pursuing his bachelor's degree and hasn't completed or filed for that credit for the past 4 years. So we determine that the qualified tuition expenses is bucks 1 minus bucks 5, a total of 5,451. Name of the institution, Baruch College. Address, 55 Lexington, zip code 10010. Did the student receive Form 1098-C from this institution for 2020? Yes. Did the student receive Form 1098-T in with box 7 check? No. What is the federal identification number? Has the Hope Scholarship Credit or American Opportunity Credit already been claimed on 4 prior tax return? No. Was the student enrolled at least half time? Yes. Did the student complete the first 4 years of post-secondary education? No. Was the student convicted before the end of 2020? No. Are you eligible for the refundable portion of the American Opportunity Credit? Answer no if 1, 2, and 3 applies to you. 1, you were underage. No, he's no longer underage. So, yes, he's eligible for this credit, and click continue. Click continue again. Now that we're done with the federal section, on the right corner we have the menu section where you can jump through. I went over this a little bit during the first video, but you have the federal section that you can go through from income to deduction, other taxes, payment and estimate, and so jump to the health insurance. Now that we're done with everything, let's go to the state section. Click edit. Yes, he has Yonkers or New York City residency. Again, everything seems correct. Click continue. Now that we added tuition credit on the federal side, we have to add tuition credit on the state side as well for Form 8863. Yes. To complete the tuition credit form IT 278, click yes. Do you want to claim the tuition deduction as an itemized deduction? No, but you want to take it as a credit. Let's go ahead and fill in the student information. Add entry. Were the qualified expenses for undergraduate tuition? Yes. Select the student, Rafael Cruz. Student claim as a dependent. He's no longer independent. Name of the college is Baruch College. EIN number 601212345677. qualified tuition. The qualified tuition was 5451 and click continue. Go back, continue. No permanent home address is not different. So we also know that Raphael paid for rent. So let's go in credit. Real property tax credit, IT 214, and fill out this credit. So he qualified for this credit because his gross income is less than $18,000. So let's go ahead and fill it out. Yes, you want to complete the form IT 214. Yes, you are a resident. You were a resident for all 2020. You occupied the same residence for at least 6 months. Your market value is less than 85. No one can claim you as a dependent. It was not a public housing. And it wasn't either a nursing home. So he rents. And he says that he pays $450 for the month times 12. That's $5,400. Let's go over the interview notes again to make sure that's the correct amount. $5,400 for a number of 12 months, and it includes heat and gas. Click continue. Continue. Scroll down again, go back, and exit New York return. Click continue. All the way to the end. Nothing has changed for the return type. He still wants paper check, so we do not have to change anything from the e-file page. Click save and double check that your ready for review box is checked, and save and exit return. So this is it for scenario 2 and updating Raphael's life event. So stay tuned for the next training videos.